Hello and welcome to video 3 of your training. In this video we're going to cover short trades. We're going to give you the rules for short trades, and we're going to cover some real examples of how to make those trades on the MetaTrader platform. So let's just get started here with the rules. When we're looking at the charts, the rules are for finding an entry point. We need to look to find two red bars. So the Heiken Ashi chart has the last two bars as red. That is criteria 1. If we've established that that criteria is met, then we look for EMA or the EMA 14 to be pointing down, and that's our second criteria. So if both of those criteria are met, we then look for the right entry point. To enter a trade with this system, we look at the first red bar. We need the price to cross over the EMA and close below it, so the price has to close below the EMA 14. And then we wait for the price on the second bar to break below the first bar's low, and then that's our entry point. And I'm going to show you this both on the charts and in examples as we're going through this. So if it's not clear yet, don't worry about it. So let's just take a look at this again. Finding a trade on a chart here, we need to look. Here are two red bars, and looking at the EMA, it is pointing downward. So our criteria is established. We have two bars, and the EMA is pointing down. We need to now find our entry point. And once again, when we're looking for the entry point, we look to see that the first bar has crossed below the EMA 14 and the price has closed below it, and that has happened in this case. And then once that has happened, we need to look at the second bar, and once the price of the second bar falls below the low point of that first bar, that's our entry point. So in this case, that red line drawn right there would be the entry point. So we enter the trade, and once we're in the trade, we need to manage it properly. In this case, it's quite simple. We set a stop loss of 100 pips, and I'm using daily charts in the examples for this system. In video 5, I'm going to talk about other time frames. If you use the 4-hour or 1-hour charts, don't use a 100 pip stop. This is solely for the daily charts that we're going to be trading in the examples here. And to exit the trade, we can either set a take profit at 2 times the stop. So if we're using a 100 pip stop, we would set a 200 pip take profit, or we can move the stop loss to the break-even point once the trade is 200 pips profitable, and then trail the stop at 200 pips. So that's an alternative exit strategy. In the examples, I'm going to use the 2 times rule. This is the simplest rule, especially when you're first getting started. Your profit is always 2 times what you risk, and it's a good way to get started. You don't have to worry about gaining less because you trailed your stop and it turned around on you. But as you gain more experience, you might want to use this alternative exit strategy as well. Trailing a stop isn't a difficult way to exit a trade at all. So let's just take a look at an example on the presentation here, and then we're going to show you some examples on the MetaTrader charts themselves. So looking here, we have a screenshot of a chart. We look to see that our criteria has been met. We have 2 consecutive red bars, and the EMA 14 is pointing downwards, and it is sloped downwards in this case. It just has a slight slope at this point, but it's still sloped downwards, so that criteria has been met. We then look for our entry point. The first red bar has closed below the EMA 14, so the price point, looking at the green line on the right-hand side of the bar, is below the EMA 14. Our price has closed below it. And then we wait for the price to break below the low of the first bar, and at that point, we enter the trade. Entering the trade and managing the trade in this case is quite simple. So just looking at the trade on a chart here, we entered it when it broke below the low of the first bar. We entered at 1.4397. We set a 100 pip stop loss, so our stop loss was 1.4497, and we set a 200 pip take profit, which is 1.4197, and in this case the trade moved in our favor. We made 200 pips profit in about 5 days time on this particular chart. So a nice profitable trade, didn't last too long, and we profited quickly from it. Let's take a look at some examples on the MetaTrader charts, and then we can show you how to set this up and show you with real data how this works. Okay, so looking at our first trade example here, I'm looking at the Euro US dollar daily chart, and we have, looking at the chart, we have a nice long downtrend. And just to take a look, we need to first look for our criteria that we can enter a trade, or that we can look for an entry point. We need 2 red bars, which has occurred here. and we need the EMA 14 to be sloped downward, and in this case it is. It's got a downward slope to it, so we're assuming that we are in a downtrend, and we can look for an entry point. So looking for our entry point, we can look here that the price on the first bar has closed below the EMA 14, and that is shown with the green line. And then we will look for our entry point on the next bar. We wait for the price to drop below the low point of the first bar, and that would be our entry point. So just to show you that here, our entry point on this trade would have been about 1.5751. As we enter that trade, we're going to set a stop loss 100 pips above that. So that would be 1.5851, or about this point here, fairly close to that. And we're going to set a take profit level 200 pips ahead. So that would be 5551, about this point here. So we set our stop loss, we set our take profit. We do that all in as we enter the trade, and if you do it that way, your trade is going to automatically, it'll either go in your favor and you'll take profit, and in this case that's what happened. It happened about a week later. It hit the 200 pip profit level, or sometimes the trade might go against you and you would hit a stop out at 100 pips behind. In most cases, with a trend system like this and trading the daily charts, the trends are going to be well established and you won't stop out very often with this type of system. The other alternative exit strategy that we could have used, we could have waited for our price point to move to 200 pips ahead. So instead of setting a take profit, we just wait so we're 200 pips profitable, and at that point we would move our stop loss to the break even point and use a trailing stop of 200 pips. And in this case, that would have been quite a profitable way to do it. You probably wouldn't have stopped out down till this point, so you could have stayed in the trade for an extra week and a half, but you would have made 400 or 500 pips more in profit. So that's an alternative exit strategy. It's not always the best exit strategy to use, and I'll find a trade example to show you why. Let's look at one more trade example so you clearly understand how to find the signals and use this system. Okay, looking at another example here, I'm looking at the British pound US dollar on the daily chart again. And first, we're looking for a short trade, so we need to establish that our short trade criteria is met. We need to see that there is 2 red bars, and in this case there is. And at that point, we need to see that the EMA is sloped downwards. So just taking a look here, we've got 2 red bars. The EMA 14 is sloped downwards. So our criteria to find an entry point is met. We now look for our entry point. We look at the first red bar, and the price dropped through and closed below the EMA 14, and it did. And at that point, we then wait for the second bar, and we need the price to fall below the low point of this bar, and that's going to be our entry point. So just putting that on the chart, we would have entered this trade right about here. And when we entered that trade, we would have used a stop loss. Our price point here, our entry point, is 1.5972. So we would have used a stop loss 100 pips behind that of about 1.6072, about that point there. And then we would have set a take profit level 200 pips ahead to 1.5772. So that would be at about this point here. Not quite exact, but pretty close. So in this case, we entered the trade. The trade moves in our favor. At one point, it almost goes against us and stops out, but it didn't happen. It stayed still 30 or 40 pips away from that line. It moves in our favor, and in about 4 days' time, we hit our take profit level, and we exit with 200 pips profit. Alternatively, the other exit strategy that we could use is to trail our stop. In that case, we would wait for the trade to move 200 pips in our favor, and we would move our stop loss to the break-even point, and then just trail the stop 200 pips behind. As I said, that's not always the best exit strategy to use. Sometimes it's going to help you profit more, but sometimes you'll get the case where it moves past the 200 pip point, drags your stop down just a little bit, and then turns around on you, and then you end up making less on the trade. Which exit strategy you use is up to you. My suggestion is you use the take profit level as you're learning the system, and then move on to a trailing stop style of exit point as you learn more about the system and get more comfortable with it. Now that you know the criteria for short trades and you've watched some real examples of short trades, move on to video 4 to watch the long trade rules and examples, and then start practicing making these types of trades with historical data on MetaTrader. Because we're trading the daily charts with this system, using live data might take a while to practice that way, but it's easy enough to just simply look at the charts, find your entry points, and practice finding the right entry points